CGTN's Ramanyang spoke with the Chief Financial Officer at ABSA's Kenyan unit 24 hours ago. At 13.7%, the bank's NPL ratio is lower than the industry average, but it still rose by 300 basis points over the course of the year. My colleagues started their conversation by exploring the key drivers that pushed NPLs 20.5% higher to over $328 million.
The first one, which contributes to the highest, is in the manufacturing sector. So we've seen an uptick in NPL, specifically in that area. We've seen in trade, again, a lot of uptick in trade. Some of it, has contributed to this NPL. And then to a bigger extent, also on the personal household sector. We've seen that also picking up. And all of it is tied to the macroeconomic conditions that was existing last year, the issues of affordability for consumer businesses, and even for the consumer sector, but even for the businesses, the element of impact on the high taxes, high interest rates has made it very difficult for the businesses, and as a result, we are seeing that uptick in NPL.
Building and construction also stood out, right, as one location where there are quite a few interesting NPLs. What explains what's going on in that market? Because on one hand, we hear a lot of talk about the affordable housing program, but then you look at the bigger picture in terms of cement consumption, cement production. Those numbers have been generally trending much, much lower. So what's going on in building and construction?
I think building and construction ultimately is on the demand side. Quite a number of investments have been done in real estates where they're not finding a home, they're not finding upticks, and so that of course then creates a strain to the developers themselves. This is for various reasons, of course, issues to do with affordability. Do you take a mortgage in an environment where interest rates are above 20%? So you find quite a number of the customers will postpone that. However, I think if you are talking to affordable housing, because that's a completely different solution that has been provided, we have seen quite a number of constructions being done, and the minutes that they're completed, upticks in those ones are going through. We've partnered with the likes of KMRC, Kenya Mortgage Refinance Company, where we're getting funding and we are on lending on single digit. So those elements of the macros that were there in 2024, high interest rates, that component, at least for the affordable housing, was not apparent. But the one that you say still will still have applied is the issues of affordability. So that one was still there, looking at this net disposable income.
The medium-term target, as I understand it, is to have that ratio around the 40%-ish level. In order to hit that over the medium term, I mean, obviously incomes will have to go up at some point. But what elements of the costs of the business would you be very keen on trying to keep under control?
We are looking at it from both sides. So one is, of course, looking at productivity measures, something that we've picked all the way in the entire continent, starting from ABSA Group all the way to the respective subsidiaries, and certainly here in Kenya. We have productivity measures, actions that we are already scoring. We are looking at a lot of automation at the moment in Kenya at 65% automation level. We want to increase that. We are looking at digitization, giving our customers alternate channels. Already right now, volume of transactions that are going through the branches are less than 6%. Over 94% are going through alternate channels. So that investment will continue. However, on the other side, which is on the revenue side, which informs the cost-to-income ratio, we are still looking at new revenue streams. We've started new lines of revenue, like, for example, the custodial business. So it's something that will continue. A lot of focus, Rama, on the non-interest revenue lines, the non-funded lines. These ones are capital light. If you do proper investments, things to do with payments, the partnerships we are doing, then it becomes very easy for us then to be able to maintain or rather hit the targets that we're putting on the cost-to-income ratios.
Might that include acquisitions somewhere along the way, perhaps? Because, if I'm looking at your non-funded income lines and I say I want to be a really big player in payments, one potentially obvious way of doing it would be to, turn around and make an offer to Pesapal and, tell Agostoliko and team, I like the business, this is interesting, would you like to be part of ABSA?
We are open to business, Rama. Absolutely. We are open to business. If we see opportunities, we will be able to embrace that. When we were rebranding several years ago, we had a major focus just to make sure that we get the rebranding right. That is significantly behind us. If you look at our performance consistently, reporting growth in earnings. We are at a level right now, we are looking at top line growth, of course, with an emphasis on returns. And if the right opportunity on M&A, arises, then it's something that we absolutely will be interested.